How can precious metal investors survive the summer doldrums when markets are just not on the move? Who better to talk to than veteran precious metals trader and Kitco's global trading director, Peter Hug. Pete, welcome back. Thanks for joining us for the summer special.
It's good to be here, Daniela.
So, despite the short-lived moves in either direction for the metals, the summer is relatively quiet. How should investors trade the remaining summer months here, Pete?
It's a question that I get asked all the time, and it's not a question I can answer. I think we've gone through this gamut before without asking the question. You really need to determine what your motivation is to get it, as to why you're getting into the metals market. Now, if you're a trader and your whole focus is short-term or even potentially long-term capital gains, you approach a market from a different perspective than someone that has a desire to balance their portfolio or hedge a portion of their overall portfolio with a metals component. So it's really the psychology on how you're approaching the market to determine whether or not or what you should buy and how you should engage in the market. Now, from a trader's perspective, it feels generally to the overall investors market, it feels like the market has been fairly quiet, but really it hasn't. I mean, just as an example, I realize that this may run at a later date, but just overnight, silver popped up 5%. And you could have bought an outright position in silver and you could have been up 5% this morning, or you could have done the straddle that we suggested for more conservative traders yesterday morning by trading the ratio of silver to gold, which at that point was 78.5 to 1, and now it's at 77. So you had a 2% gain there on the straddle trade. So, there's lots of opportunities in this market if you're a trader to be in and out of the market. So in that context, I think the market has been relatively volatile, even though it hasn't broken out of any serious ranges within the last couple of months. From an investor's perspective, again, if your portfolio is based that you are happy with your overall portfolio, but you want a portion of your portfolio, for lack of better word, as protection against the other 90 or 95% of your portfolio, which may be made up of equities, could be real estate, could be bonds, and you want to hold a portion of your portfolio in gold. It's not really relevant when you enter the market. It's more relevant that when you enter the market that you manage your portfolio accordingly, and you reset your balances every 3 or 6 months. So, if you want a 10% weighting in gold in case the stock market tanks or in case Donald Trump doesn't deliver on his promises or there's an issue with North Korea, you buy your 10% component. And in 6 months from now, if the gold market is much lower, your portion of your gold relative to the balance of your portfolio is likely to be below 10. So you add to that position. Vice versa, if the gold market is considerably higher, in 6 months, your percentage may not now be 10%, maybe 18%, in which case you sell a portion of your gold position to bring it back to 10. And you treat it in that context. And therefore, you do not look at it every day and say, my God, I paid $12.20 today and yesterday, and today it's at $12.10, and you get upset about it.
Right.
You have to go in with that psychology, and then once your psychology is set, it's much easier to define which way you should be investing in the market.
I like that, Peter. Just like one should not be weighing themselves every day, maybe we shouldn't be watching it every day. Now, you mentioned the gold-silver ratio, and I know we brought this up in the past, but is it something that a beginner can do? Can they trade on that strategy?
Absolutely. I mean, you can't trade it in the cash market in the sense that you can't short gold and go long silver, or go long gold and short silver. That's you can't do that with a dealer, but you can do it on the CME. They've developed a contract that actually trades the ratio. So yesterday you could have shorted the silver gold ratio at 78.5 and bought it back this morning at 77. It's like trading a futures contract. So you have the leverage to be able to do the ratio trade directly, not only between gold and silver, but between gold and platinum, platinum and palladium. And there are times when you can take advantage of a market by limiting and quantifying your risks. So, having done that ratio yesterday, had gold continue to tank, your bet is that silver would follow gold down, but not to the same extent. Vice versa, had gold gone up, which it has today, but it's only gone up $4, $5, and silver's gone up almost 60 cents. So silver will outperform on the upside. So on the ratio play, you make money. At the same time, you have protection because you have the other side of the trade is either long or short against your silver position.
Now,
so it's a much more conservative way to play it without the same risk that going net long or net short silver on a futures exchange would entail for the investor.
Let's wrap with a longer-term fundamental picture. I know you just love when I ask you to predict the outlook here for gold, Peter. So how do you see the next 6 months shaping up for gold here? Are we going to stay in this range?
No. I can tell you we're not going to stay in this range.
Thank you.
But the up or downside of this market is not just a linear, you can't just answer that question why it's going higher or it's going lower. It is impacted by events that are unfolding in front of us. Will Trump be able to get his stimulus package in place, which the Fed is counting on for them to continue raising interest rates? If the financial system in the US, if the equity market starts to take a hit because Trump cannot deliver on his promises, I believe the Fed then reverses course on tightening interest rates, and as a result of that, will create a good buying opportunity for the precious metals. If the U.S. economy starts to grab legs and the Fed normalizes in their interest rates and raises rates 3 or 4 more times over the next year, year and a half, I think the headwinds for gold are going to be serious, and we could see gold not much lower, but certainly below $1,100 again. So it's not a yes or no answer. It really depends on how things unfold, and right now there is a lot of uncertainty, and I think that's what's holding the gold market where it is right now.
All right, point made. Pete, you're already getting calls, so I'll let you go.
Thank you.
Thanks for watching the summer special with Peter Hug.